What's good, YouTube? It's your boy back again with another video. We're going to go through the breakdown of the majors as usual. EURUSD, USDJPY, GBPUSD and USDCHF. Today is the 14th of January 2021. It's currently 4:08 p.m. in New York time, which means it's just under an hour before the New York candle close. And there's been some activity in the market since we last did a breakdown, so let's get straight into the charts and see what happened. So we're going to start as usual with our first pair, which is Euro USD, the most liquid pair on the planet basically. So as you can see, not much has happened since our last breakdown. Price was around here and then price kind of bounced off the zone. We did not take any trades because this was not the first return to the zone, so we only trade the first returns to the zone. So we will ignore this movement right here and allow other people to take advantage of that if they wish to. We did draw a zone up here, so any return to this zone would be, seen as a potential sell opportunity, even though our monthly bias is still bullish. But price dropped, it based, and then it dropped. Supply and demand terminology. So within here there's actually another zone that we did not highlight last time, so I thought it would be good for us to highlight it now, so that in case price does come here, then definitely that would be an area of interest for us. So as this is a fresh zone, if price does come up here, we see a potential signal, whether we take a 50% limit order or we drop down to a lower time frame, i.e. the 15-minute, and then see a signal, bearish signal to continue short, we would take this because it's a fresh zone and we are potentially starting a deeper retracement. This zone has been tested, as you can see, 1, 2, and this is 3. Price came to the zone the third time. It stayed here for a little while, went up, and then came right back down. So all signs are leading to this zone probably being neutralized really soon. And once we get a 4-hour candle closure beyond this zone, we would delete this zone, and then we would be looking for further targets, which would be this zone right here. This zone too has been tested once, so even if the price comes here, we will not be looking at this for potential bullish trading opportunity, but we will leave it on there because it might be cause for some sort of pause in the market as a form of level of support, so it would aid us in our analysis in the future. This zone all the way down here though is fresh and has not been touched, so if price does ever reach that point, we could use that as potential bullishness as long as we get a signal inside our zone. So that's that about Euro USD, plain and simple. Not much has happened on that pair. So we go on to our next pair, which is GBPUSD cable. So GBPUSD, as we see, price kept moving northwards as we anticipated. There was a brief pause here in the market. It took a couple of days to almost a week, I guess, and liquidity was taken, jumped right into the zone. First touch of the zone, beautiful response, beautiful reaction. Price moved up. Let's calculate how many pips. I think around 250 or so pips. Yeah, 230 plus pips up to the north side. It came right up here to the previous resistance, and now it's experiencing a slight retracement. This is to be expected because people who see this will say, okay, double top, it reacted bearishly last time, so it's going to do it again. So there's definitely people who are going to sell, as well as people who would use this as targets to take their profits. But this, to me, it does not seem strong. I firmly believe it will come back up and then tap this zone up here before doing anything else. But since the price is right now stuck between zones, we're not going to do anything. We're just going to sit on our hands and wait till price. We only react when price comes within our zones, and if the zone is valid and if the zone has not been touched or has not been tapped before, that's when we react. So right now GBP USD is looking good. Those who were able to take a trade here are now deep in profit. Don't worry about these retracements. You should by now already move your stop to break even and even lock in some profit. Maybe close partials, whatever your risk management system tells you to do. Make sure you follow it, because that's the only way you're going to get paid. When it comes to this forex market, you are your own boss, so you're going to have to decide whether or not you're going to take profits at certain areas. Don't let the market decide it for you. You should decide pre-entry of any trade. You should decide where it is you're going to take profits. Anyway, before I get into a deep rant, that's that about GBPUSD. We'll go on to our next pair, which is USDJPY. Now USDJPY had some activity. We had a zone here that we highlighted, and the zone has been neutralized. As you can see, price came back down and then closed beyond the zone, so that effectively neutralizes the zone. Now this was a valid zone, so potential trade opportunities could have been taken here, and let's see how many pips below the zone did the price end up reaching. It came down around 7 pips, so usually I would recommend around 5 pips below the zone. So if you did in fact enter, whether it was at the top, at the middle, or maybe you had a signal on a lower time frame and you put your stops below, you would have definitely gotten taken out of this trade, and that's okay. It's no problem, because losses are definitely within the scope of trading, and that's okay. There was a zone here, if you remember, in our previous breakdown, but I removed the zone as I looked back in time history, looked to the left, and there was a lot more levels. So I sort of refined the zones, refined the levels, and due to that there was another level here. So I did not want too many levels to be stacked right beneath each other, because the chart would be too cluttered. So I opted to remove that zone. The zone originated from right here. As you can see, there was a movement that caused a break of this swing, and as well as this swing, and then ultimately this swing. So that's where my zone originated from. So it was drawn from this level up to this level. As you can see, the zone is right beneath this zone, which is also right beneath that zone. So it would have been too many zones, you know. So when that happens, I tend to remove. If I have a I mean, this comes with experience, I guess, and you know, being on the charts, chart time, you know, after a while you get to have a sense of these things. So you kind of sense which zones are less strong or less valid than other zones, and then you just choose to remove them. So it's really up to you. If the zone is still there, it's okay, no worries. I just opted to remove it. But since price is closed beyond this zone right here, I will definitely remove this, because there's no more use for the zone. The zone has been wiped out, you know, it's been neutralized. So we might as well remove it from our charts. But remember that there was an impulsive move that came down here, and this impulsive move definitely broke a swing. I can see one swing that was broken here, there's another swing right here, and ultimately this swing right here. So this move definitely is noteworthy, and as such we will definitely highlight our zone that led to that movement. So this would be the zone right here, and we can extend it into the future, so that if there is a return to that level, we can definitely look at that as a potential opportunity to continue short. Remember, our bias is still bearish, so if price does come back here and gives us a signal, or maybe you want to put a limit order on the 50% or right at the base of the zone, stops above, that's definitely fine. It's a valid, definitely it's a valid trade idea to go with. And that's that for USDJPY. A lot cleaner, a lot more, you know, we have a wide zone here. So let's say we do get a trade opportunity, there's definitely potential for profit till our next zone is over 100 pips, and the zone itself is just around 20 pips. So depending on where you take your trade entry, you could have a stop of 10 to 15 pips with over 100 pips potential profit, which is like 1 to 10, 1 to 9, 1 to 8 risk reward ratio, looking really good. And our monthly bias is still bearish, so you're going with the grain, not against the grain. So yeah, that's that. Now let's go to our final pair, which is USDCHF. USDCHF was very interesting, actually. You know, I woke up today and I saw this setup and I was like, damn, I should have been in this setup, but I wasn't awake, I wasn't around the charts, so I missed it. So as you can see, we are just like USDJPY, we are bearish. We have these zones up here, and we have this zone. This is a fresh zone. We covered this in our last breakdown. Price was around here. Had you entered in here for a short, I believe you would still be in the trade, because the price only came 2 pips above the zone, so it wouldn't have taken you out had you put use the 5 pip stop loss unless your broker has like seriously wide stops, so that's another thing. But USDCHF is one of the most liquid pairs. That's why I only do the majors. The majors are the most liquid in the forex market. EURUSD, GBPUSD, USDJPY, USDCHF. As you can see, this broker FXCM, the spread is 0.5 pips. So other brokers might be 1 pip, you know, or so, but definitely if you had 5 pip stop loss and you entered anywhere within here, whether it's at the base or at the middle, or you waited for a lower time frame signal, you would definitely be in this trade. And your first target would definitely be this zone right here, because this zone was created, this zone existed while your entry, when you made the entry, so this would have been a nice little trade. But anyway, the trade I was talking about was the bounce from this level to this level. As you can see, this zone was fresh, so the first return we would be looking for a potential trade entry. Now this zone was a bit huge, around 35 pips, huge for USDCHF, but it's not huge for other pairs like, let's say, GBPUSD or anything. But so seeing that it's a huge zone, you have different entry mechanisms. One is the 50%, obviously, that we talk about. One is at the base, and the other one would be like a potential dropping down to a lower time frame, such as a 15-minute. Now for me, I saw that the 15-minute gave a very beautiful signal. As you can see, this is the price moving towards, it tapped the zone, but it didn't really react, and then it came back in, took out the lows, and then it gave this beautiful pin bar rejection. Now that is definitely a very good signal that you would want to like definitely keep an eye out, especially knowing that you are looking for potential bullish momentum, a bounce off of that zone. And if we just use this session indicator tool, you can see this green portion of the chart indicates the London session, or the beginning of the London session. The orange is the overlap between the open of the New York session and the close of the London session. So London begins here and ends over here. New York opens here and ends over here. So as you can see, this signal came right around just before the open of the new London session. So that could have been further confirmation, or confidence for you to really take that trade. So that was a really good signal, and it was a very quick no frills trade. Let's say you took a long position at the close of that candle. Typically you wouldn't put your, well, it depends on you, but because this, like I said, this zone was really huge, putting your stop all the way to the other side would not be, you can do it definitely, but your risk reward would definitely be affected. The better thing would be to put it 5 pips probably beyond the low of the wick itself, or the candle you use, whether it was a wick, or sorry, not a wick, pin bar rejection, shooting star, morning star, or whatever, or if it was a bullish engulfing, whatever candle pattern you used to enter. If you were using a candle pattern entry, unless the candle pattern entry happened like in the lower portion of the zone, if it happened in the high, like the top 50% of the zone, a better RR play would be to put your stop loss 5 pips beyond. So here it would be like 5-6 pips at the wick, so add another 5 pips, so it would have been something of like a 10-11 pip stop, and then you would target the next zone. That would be your first target. Obviously you could hold for longer if you have faith in the trade going, but your first place for locking potential profits would be the zone. As you can see, the zone was around 32 pips away, and you had 11 pips, so it's like almost a 1 to 3 trade, and it happened within the space of a few hours. So that was a really good trade, 1 to 3 risk reward, very no frills, easy setup, but it's okay. Opportunities come and go all the time. So right now we are stuck between these two zones. Price came up, tapped the zone, and then it came back, tapped the zone again, and then now it's just stuck in between. So USDCHF isn't doing much right now in terms of activity, so we'll just keep our sit on our hands and then wait. This zone has been visited now multiple times, so if price does continue to attack this zone, there might be a probability, or might lead to signs of this being wiped out, and then we might see further movement north. And that's that about the USDCHF. Thank you very much, and stay tuned for the next breakdown. Peace.